Hello traders, welcome to today's video where we are going to be taking a look at imbalance. We are going to cover what imbalance is, we're going to go over the two main types of imbalance that you see within the chart, and we're going to give some examples of how you can use imbalance within your trading. As with all of these videos, this is not trading or investment advice, it is simply for educational purposes. As this is a order flow type video, you do need to have an understanding of the footprint chart in order to know what we're talking about here. If you do not understand what these charts are, then please do check out our Exo Charts Beginners series, which can be found on our YouTube page. Now, for the demonstration purposes that we're going to be doing on the video later on, we're going to be using the same template that we used for our previous absorption video. And what we are looking at is our delta ladder and our imbalances. Now, you can turn off the delta ladder. It's not really necessary for this. So the main thing that you need to be looking at for these imbalances is the red and the blue dots that you see here. Okay, and the shaded text. Okay, so this is the text that is a different color. So you can see the red text that we see here and the blue text that we see here and down here. Okay, those are showing imbalances, whereas the shaded boxes that you can see, okay, your shaded boxes rather than the little dots, they are your deltas. What we also have down at the bottom is your volume or trade count. In this instance, this is the trade count, but you can also use volume. It has the same effect. So what is imbalance? Imbalance is where you have an overwhelming amount of aggressive market participants trading in the same direction. So either loads more buyers than you've got sellers, or loads more sellers than you've got buyers. This is often coupled with a lack of passive limit participants or liquidity within the order book. It creates inefficient order flow, which often leaves behind single prints or fair value gaps. You often see liquidity providers pulling orders within these areas to avoid getting caught in the move. So if you have access to the level 2 order book, then you can see the pulling of orders as you are coming into these regions where you get the imbalances. And it ends with either a lack of momentum resulting in a mean reversion to fill inefficiencies, or with participants holding the bid or the ask with trapped traders forced to hedge. So this is the bid-ask profile, and this is what you are looking at for your imbalances. Why is this called the bid and the ask when the bid is selling and the ask is buying? Now, this is because the bid is selling into the bid. So the bid is what's going on at limit. But the market participants here, what you're seeing on the numbers, are your market sells that are coming into the bid side. So people are bidding and people are selling into that bid. And these are the numbers here, are the sellers that are going into the bid. On the opposite side here, you have the ask, okay, and that is people that are buying at market into the ask or into the offer. So this is why you call that the bid ask. And the way that this tracks and the way that you calculate your imbalances is diagonally rather than horizontally side to side. So you can see three examples here. Now, on this example, you've got 181k on the ask and 41k on the bid, and that therefore gives you a significantly larger number of buyers into the ask than sellers into the bid, which creates this imbalance. Straight below that, directly below that, you have 136k against 180k. Now this, although it is slightly more selling than buying, it is not enough to create an imbalance. So as standard, when you open up your chart, you're looking for a 250% difference between the bid and the ask. I sometimes push that even higher, up to around 400%. That gives me a much, like, it takes away even more of the noise and it gives you more extremes that you can use to trade. Below that, you've got 39k against 275k. So quite clearly the sell side, the sellers there at market are overwhelming the buyers there. So either side of these, you see the zoomed in and the zoomed out version of this. This is your footprint charts that is showing you each candle. And on the zoomed in side, you are looking for your shaded text. And on a zoomed out view, you are looking for the dots. I personally prefer to use the one on the right hand side here, that zoomed out view, when I'm looking at imbalances, because it's just much more simple pattern recognition and you're kind of avoiding the noise of having to read all of the numbers there. However, it is nice to be able to zoom in on the chart and to be able to see exactly what is going on if you need to do so. So the two different types of imbalance, we have exhaustion imbalance and we have momentum imbalance. So the first one is the exhaustion imbalance, And that is where market participants clear through a key level, creating an extreme of value. Aggressors then withdraw, which leads to a loss of momentum, and price can return back to balance. It can also be called a completed auction or a reversion. It usually occurs where stop losses are placed, or after a break of structure, or often if you get liquidations occurring. A common characteristic of the swing failure pattern, and volume can become trapped within the wick of the candle. This then leads to absorption. So as we often like to do, we like to give a little mascot for this, and this is the pole vaulter. So think about all the momentum that it takes for a pole vaulter when they're running up to take their jump to go over the pole. It's very much similar to the exhaustion imbalance that you see. You see the momentum building, and then eventually you have that final push that takes you over, or on the flip side, under a key level of support or resistance. And what then happens? Gravity brings you back down to ground. Or if you do want to flip that, either an inverse pole vault, or think about like holding a beach ball underwater. If you push it down underwater, it's going to pop back up again. Then you have the momentum imbalance. And this is where market participants hold sustained momentum in one direction, with one side greatly outweighing the other, often with a lack of absorption. It creates a void in price, which the market will seek to repair. So this is your single prints. It is often triggered by impulsive moves when the order book is thin, and price continues in the direction of the market, often within internal structure or after a breakout of a key level. And for this one, we're looking at this guy jumping over a gap, because essentially that's what it creates. It creates a gap within price. It creates a void within price. It's slippage. And the market will seek to repair that. So you don't really want to be trading with all these holes on your charts, all these gaps within your chart. The market are going to want to repair that, and it makes it a much nicer environment. So essentially, yeah, the market will seek to come back in and repair those imbalances. Now for some examples, okay? We're going to show you just a quick example here with your initial kind of exhaustion imbalance, and you can see the momentum builds, momentum builds, momentum builds, and at the top, pattern recognition. Okay, you see the imbalances right at the top, trapped within that wick. Then that leads, what happens? The guy jumps over and immediately falls back down to earth again. Now what straight away happens here is you get that jumping of the gap. So you've built your support, and then price just goes straight through in the opposite direction, once again creating, on this occasion, the inverse pole vault, or your beach ball underwater, and price shoots itself back up again. Now this is important here, because what you can see is where you have balance within the chart, you can see your buying imbalances at the top here, and you can see some relative balance without too many imbalances and too many of these coming through. And price comes back up, and where does it start to get that resistance? Price fills all the way back up towards this area of balance that you have back in the chart. And it's the same on the other side, really. It's just not quite as clear. So as you create these imbalances down at the low, you have that initial bounce, and price does come back in to meet where you have these imbalances and returns back into value. Okay, so on each occasion here, you have that spike up, then you get that chasing effect down, which creates that void. You spike down, and then the market seeks to repair the damage that was done by this jumping effect. And now we can take this one level further, and we can look at it with absorption. Now, this is very small on your screen, maybe you might have to look at this, but there are a few different occasions here where we start to kind of stack this together. You stack the absorption with the imbalance, and that gives you pretty much the whole flow of the market. So here you start off down at the bottom with your inverse pole vault, price bounces up, and then your mattress starts to absorb. Okay, you can see as you get this backtick after that initial exhaustive move, you get that backtick of price, and you start to absorb it. You start to absorb that impact. You're not going below this level. And then once again, price continues to move up, and you get that chasing effect as you're coming back down here. And you can see at the lows of each of these candles, you're getting that chasing. Okay, so the bid starts to chase. You then get a shoot up in price, which creates a gap. Okay, buying imbalances all the way up until eventually you lose momentum with the imbalances up at the highs. absorption kicks in, that backtick, getting your absorption, you chase back down, creating that gap, price comes back in to repair the gap, you then start to absorb, and on each of these backticks, here and here, you are getting your chasing effect as the bid starts to chase. You gap back up, creating further imbalances within the chart. The pole vaulter again, with the absorption, starts to chase down. You gap back down again after filling in these ones. And then on each of these backticks, you can see at the top of the candle, you get that chasing effect on this occasion with the offer or the ask chasing price back down until eventually you reach another extreme and the whole process continues to repeat. So I understand that's quite a lot to take in. Hopefully this kind of makes sense with the way that you see the market. You'll go from an extreme, you'll go for that big jump over a level, then you'll have that cushioning effect to absorb. The market will start to chase and then it will impulse out of it, creating the imbalances. And you're just repeating that cycle, repeating that cycle, repeating that cycle. So by understanding the way that the market is moving and by knowing where you've got absorption going on and where you're seeing imbalances, you can gain a really clear understanding of how exactly the market is moving, who is in control, are the passive participants in control, are the market participants in control, do you want to get involved, and you have a very good sense then of risk and of direction in which the market is moving. So that brings us to the end of this video once again. I hope you did enjoy it. If you did and you found it educational and informative and maybe entertaining, then please do hit the like button and subscribe if you have not done so already. And also please do visit torrescrypto.com. This is where you can find out more information about our trading community. If you are a new trader or if you are a trader that simply wants a little bit more guidance within the market, then please do consider joining our crew. Within the crew, we do live trading sessions on a daily basis. We have a ton more educational content there. We've got playbook strategies which put these theories into effect that you can trade every single day. We share our setups. You can use the templates that I'm showing in this video, and there is a ton more stuff on there. So do go check out torrescrypto.com, and yeah, have a great day, and I'll see you in the next video. Cheers. Bye.